Okay, no, I record. So as a trader, you have to know what are you trading. So let's what would call under a trading plan. What call under a trading plan. How tell I'm market day and then over top or no, today I'm trading V100. No, so for something say look specialize I'm also as a trader. You have to specialize. How so now trader US take can't tell gold, can't tell GBP USD, GBP JPY because behavior ya GBP JPY le GBP USD ga di tshwane ebile gape behavior ya gold le behavior ya Nasdaq ga di tshwane. You have to specialize gore o kgone go tlhaloganya gore o dira dilo tse dintsi mo marketeng. So for example, I trade gold, I trade US30, I trade Nasdaq, I trade German 30. So ke itse gore US30 le Nasdaq le German 30 di structure tsa teng di a tshwana. US30 US SEC, German 30, the structure of the one. And then gold, you know the structure of the one, and then the structure of the one. And then if it is okay, this one, it say like Keleko Xness. And then when I trade synthetics, I don't trade everything. When I trade synthetics, I use V50S, V25S, and V100S. Lanka when I set up V75, trade because high you're planning. So that's how you build your psychology. If you execute trades everywhere, go on set up a thing. Blow account because mom marketing, how is mom marketing? Always one schematic. Haribula V75 one schematic because the schematic is imbalance concept, imbalance feeling. Imbalance plus QML, SHBOS RTO, SMS BOS RTO. We have breaker blocks, we have supply and demand flip. But I want to set up that. So obviously, how to have step index or set up them. How to have V100 set up. So that's why we have to specialize. Make sure after this lesson, we are trading plan a follow. Next, the strategy that you are using. So the strategy that you are using is SMC. SMC is smart money concept. So yes, you can use SMC L1 here, but now I use SMC L1 sometimes I can add Confluence using the retail method. So you can use SMC L1 without trend lines, or you can use SMC with same. So that's why I had quality strategy. I want to SMC like SMC L1. You can combine SMC plus ICT. What are you trading? It has to be simple. The way your name is also really simple. And then more include more trading plan I have. You have to include so you have to include all these things, set risk levels. So before you can attempt you have to calculate everything. Calculate the risk. How you set up? How entry also calculate the risk. So calculate this or no. I have a $50 account. This is how I'm going to enter. This way I'm going to place my stop loss. This way I'm going to place my take profits. So how tells an element marketing, then you place a stop loss. So it's in what stop loss and then from your entry to take profit, how much are you going to gain? Because at the end of the day, price is 50-50. Lose 50. More trading. If you lose $50 stop loss. But if you gain $50 take profit. At least when you lose $10 in order to gain $60. And then gain. If you lose, you lose $10. If you gain, you gain $60 or 100. So that's why we have to set risk levels. You have to set risk levels. You have to set your take profits and stop losses. So ke lo tse le gore tshwanetse di nne mo teng ga trading plan. Ke lo tse le gore o di dira before o ka tsena mo entry ya gago. So, and then the next thing, I got to go setting rules. Before you can trade, you have to know what's the risk, what's the reward, what's the risk, and what's the reward. The next thing, set weekly, set monthly, and then annually goals. Depend weekly. Yes, it's hard. It's hard. You can say $20 per day, but $20 it's easy, but discipline because if you lose $20 or $20 frustrated $20 and then you end up blowing your account. So that's why I trading plan simple. So under your trading plan, you have to know the stance, you have to set entry rules, you have to set entry rules and exit rules. So so trading plan, that's number one. Trading plan to build your psychology, that's number one. And then number two, in order to build your psychology, you have to understand in Forex, we have fear. So like how it's marketing, marketing, and control. So let's take an example. So let's say we have setup number one, which is 1, 2, and then SH, break of mega structure, and then return to order block. So if you understand the schematic that we are working on, what apply concept against fear, I get a only fee because okay, we have SH here, and then we have break of mega structure, and then we have our order block. So we have fear of missing out. The form fear of missing out. Fear of missing out, you are waiting for the price to return to this OD. And then her price is order block. Many traders because they have fear of missing out. Imagine entry, let's say 8 hours, and then order block. Block or order block confirmation entry. So the trader they will end up involved in trading or okay, there's an order block here. Then after this order block, they break of structure. They wait for the price, they buy this OB. So second fear of missing out to control you. Just apply the basics to the marketing. If you know okay, we have SH, we have break of market structure, we have order block, and then we have to add confluence marketing. It's got a price, it create a confluence, then one a damn smart money trade. A damn smart money trade like what's an inducement. Imagine if we have inducement marketing, and then about place at the entry more inducement. So you have to spot liquidity always marketing. Don't let fear of missing out pressure. Yes, sometimes okay, we have this OB, and then over price you reject either confirmation or what's imbalance. Still, thing. Marketing, entry only confidence. We should know if the price for a well guy, block until you reach this OB. If the price for a well this OB, until you reach this OB. So this up today. This setup today. This is it's V50. V15 are the same things. So it was marketing. Marketing. After us skill, after us SMC, so you need to practice psychology while you are still learning. Gore re nako e le gore o sentse o tshwere concept e yotlhe o ska wa nna dingalo tsa psychology, because psychology ke yone seo se ile gore se tshwere almost 90% of traders ga nke psychology. 90% of traders ga nke psychology. So how level this setup? Let's start from the daily time frame. Let's start from the daily time frame. So in daily time frame, we have what? We have this order block. So we have this order block, we have SH, here, and then we have break of mega structure. Or if we want to break of mega structure, we have what? We have liquidity in form of a triple top. We have liquidity in form of a triple top. So the price is to buy in order to clear that liquidity. So then we jump into smaller time frame. Obviously, this one is inducement. We jump into smaller time frames so that we look for confirmation ends. That's why Ragai for 1 hour time frame. That's why I go 1 hour time frame. Okay, so this 1 hour time frame, movie 50. Remember what hardware confirmation entry. So Baba me confirmation entry mo group. So let's call our level say rank. So I want to now we have the price in aggressive vehicle demo breaking this previous structure here. Breaking this previous structure. So the order block that is responsible for this break of mega structure, order block. So if setup if fall under step number 1 or step number 2, okay, this one is setup number 2 because this is SMS break of mega structure, and then return to order block. Obviously, we add confluence 1, 2, 1, 2, 3. 3G Yahweh order block. That's why I can like if you trade deriv, so create a room for manipulation. If you have 3D, 1, 2, 3, the price is to buy. Price as on a simulate boila motenyana, simulate creator. So here we have change of character. Change of character here. So our entry is also in there. So because we are still under 1 hour time frame, for our regards in interior 1 hour. So we have to look for another schematic under 1 hour setup entry perfect. So that's why we jump into 15 minutes time frame. 15 minutes time frame. So in 15 minutes time frame, really so in 15 minutes time frame, we have change of character here. So if we have change of character in 15 minutes time frame, that one in a break of mega structure. Break of mega structure, and then we have the smaller SH. SHO account so SHO Siame. And after SH, we have this clean and mitigated order block. This one. So price it's a order block. Price it's a order block. But at the end of the day, it's a violate order block way. And then lastly, if I will happy mitigate order block way before I can ML like Zama. So fear of missing out. It's a guy. Fear of missing out in a hotel. Or we have this unmitigated order block. Obviously, it's also price if I clear liquidity. And then imagine price break a mega structure. Order block way or order block final order block. And then obviously only few of missing out because what I was saying price. And then if I like order block, so to avoid having fear of missing out, one, trust your analysis. If we really set up order block, wait until the price reach order block. Because anything so ya go sira wait for the price for a point of interest. Rule number 1, we don't control the price. You don't control the market. So ha le price ya go ba mo da blockong e be boa mo tseleng ke mathata a gago. We don't control the market. So mo mo gape mo ka go irang gore o kgone go builda psychology ya gago ke gore use limits. Ba limit ya gago mo da blockong ga go na le market, and then price e tata yone e be e activate price price e tata e be activate limit ya gago. So number one, you have to o tshwanetse gore o nne o ska nna le fee mo wa tsena mo marketeng. E nngwe ke gore you have to make sure gore o nna le trading plan, and then mo gongwe gape if is e le gore like wena ga ona fee of missing out mo marketing. Number two, o ka bolawa ke gore o greed. Number two, o ka bolawa ke gore o greed. So fear and greed ke lo tse di tsamaelanang. So let's say we execute le trade la sente o emetse gore ete mo da blockong. So ka lebelela dilo tse ke buang ka ga tsone tse o tshwanetse gore tsote di nne balanced gore o tonne a good trade. So if you execute your trades here and then take profit ya go e be nna kwana e be re tswa e tsena mo take profiting o bo holder eng price is mo take profiting. So that's greed. How so not only greed mo marketing? They say you have to accept everything say the price ya go se ne ha le gore price go ne $10 tsa $10 go itsamaela ha le gore go ne $100 gago tsa $100 go itsamaela because a gona poka gona la medi a ka. So tsa sengwe le sengwe se le gore price ya go se ne o ska nna greed. So if o feel gore price ya go pusha above this high it take profit ya gago, you can move your stop loss from here. You can move stop loss ya gago le no se beile ha o bo se isa kae o isa go break even. Break even ke gone go ileng gore o be take profit ya go teng o ba stop loss ha price le se yone tsa masamoegi. Then if price ya go reverse ita stop loss o tswa ka medi a gago, and then if ya tsamaya go godimo ke bonus le gore price ya go e nela. So you have to overcome greed. And then lastly ke gore you have to be disciplined. Gore to overcome greedy ebile gape gore ska ta wanna le fee ebile gape gore o follow trading plan ya gago, you have to be disciplined, because if you are not disciplined ha o tswa o sna go analyze setup ya gago o tsena mo Facebook o utlwa motho a re crash ya nka ka thola e buy wena na go o bone buy wa go tlogela buy ya gago bo retsa motho mo Facebook o lebala gore you have the skill. So you have to trust yourself, only discipline. You say gore no, if ke bone buy mo crashing ha ke dumela gore buy because of this and this and this and this and this ke follow setup ya. So ke dilo tse le re tshwantse gore o nne o make sure o ska letella crowd gore e go destroy. If o dumela gore crash ya go sela o na le reason e solid, then go for it. Be disciplined, and then mo gongwe gape ha o tshwana gore no change direction as mo marketing. If you are buying, buy. It's ka ruta batho ba re we are selling, then le wena bo tsena mo nnete wa teng bo sela. So re ka di bua le dintsi dilo tse le gore you have to do in order to build your psychology. But lo tse ke buleng ka ga tsone tse three tse ke basic, ke foundation ya psychology. How se greed, how se na fear mo marketing, o na le trading plan, o le disciplined, o se motho le crowd le go retsa crowd. Then psychology, we are done with the part of psychology. So psychology has a business needs. Keep mind, get the way we are going to get the mind. So if you have the skill and then you have psychology, you can say it on your own because I want to. So that's all about psychology. And then the next part, is risk management. Part they get fundamental analysis because I research touch this one I touched before. So now let's talk about risk management. So risk management is one of the things that we talk about marketing. To apply risk management, firstly, psychology. That's why you need market balance. To apply risk management, psychology. So to apply risk management simply, entry We have two entries, confirmation entry, and then we have order block refinements. It's all entries already. So if you have your 15 minutes order block in time, and then you have let's say a $50 account, and then you are trading something say like what is this volatile. You are trading, oh no, let's just say V50 because you are trading V50. Oswere account there, account there $50. So if you risk, make sure you risk a little account to it. Okay, so account there $50 and then over time 100. It's possible for 100 account $50. But I 100 by 10 account $50 movie 50. But if you apply risk management, you got some 100. Rather, you got some 10 by 2. What like about shading if you place below 10 by 2, also le motho ele gore ene o ithopetse gore a ba khuje below 3 bale bakae 7 or so. So when as a trader, you have o santse go tlhaloganya gore ba code sometimes e gona go irela mathata e setse. So o tshwara account ya $50, apply risk management, below 10 by 2, 1 2, you hold till TP. If you hit a stop loss below 10 bale, chance tsa gore e be ngwe jile $10 ngwe jile $10 ga re sala ka bokae $30. So always make sure gore if you risk more marketing o sala ka seng. O ska risk hela o le blind mo ile gore if price ya go ita stop loss sa gago o sala motho na sa tsenya stop loss. So risk to make sure gore if price is against wena, because we don't control the price. Sometimes the price can go against us. So if it's against wena, if you $20, you are left with $30. So $30, one analyze ye nngwe gape le gore wa trade ite mo planning ya gago. O bona perfect entry. If you risk take profit, we really $50. Gora gore o na le profit ya $30 ya no go cover that loss ya $20. So that's how you trade. You have to plan before you execute trades. Plan gore if o tshwara account at $50, how much are you willing to lose? And your take profit over the jabo kae mo trade o tsena mo go yona. O ska tsena trade o le blind. Go na trade le gore the reward is small and the risk is big. Enter high probability setups. They will benefit you at the end of the day. But 1 is to 50, 1 is to 100, 1 is to 200. So that trade is you can risk hard and then stop loss in that type. So with the risk management alone, still I gonna it's all about knowing how to manage your risk. So today's lesson in the risk management, trading psychology, and then lastly, let's talk about the fundamental part. So fundamental analysis. Remember, we have two types of analysis in the market. We have the technical analysis, and then we have the fundamental analysis. So the fundamental analysis is a type of analysis it focuses more on the economic events around the world. So in order to trade using the fundamental analysis, trader currencies, currencies, anything say it's either trade the stocks, you trade forex, you trade crypto, you trade indices. Using fundamental analysis. So what is synthetics? I want fundamentals. So you only use fundamental analysis when you trade so under fundamental analysis, because so now I don't trade the fundamentals I trade fundamentals they can shake the markets. So fundamentals the profitable. it's NFP. NFP number 1. So ke yone NFP ke nngwe di fundamentals le go di tona go itse di fundamentals so tse di tshediwa. So NFP we emetse non-farm payrolls. We are left with 10 minutes so ta ke le ke go kopanya concept yo te bane. So NFP we emetse non-farm payrolls. We trade NFP and then we trade CPI. So CPI we emetse core price index. So CPI we emetse core price index. So before o ka go trade the news events tse dingwe tse le gore go na le bo unemployment rate, go na le bo employment rate hela go na le bo USD jobless claims hela tsa bo GDP. But now let's focus on the bigger picture, USD, the fundamentals say or dama USD, because bontsi ba rata trader USD. So main focus ke NFP and then CPI. So NFP iragala leng. So the fundamental side NFP diragala first Friday kgweding nngwe le nngwe. So which means mo ngwageng re na le NFP di le 12. Mo ngwageng re na le NFP di le 12. And then CPI iragala on the 3rd week kana beke ya bo 2 kgwedi le kgwedi. So there's a website e le gore o tshwanetse re dirise go bona di fundamentals tse tse di iragalang. So website e bitsa go te Forex Fact. Forex Fact. You tshwanetse re dirise. So if o sena laptop, you can use investing.com. Download app e bitsa go te investing.com. So under investing.com or Forex Factory, go na le those. So go na le mo re bitsa re date go supa gore dilo tseo di a go iragala leng, and then mo ke nako ya gore that fundamental ya go iragala leng, and then le gore that fundamental e ama currency e feng. We have fundamentals at JPY, AUD, CHF, Euro, but our main focus is more USD. Our main focus is more USD. Remember, as a trader, you have to balance both technical analysis and fundamental analysis. Because fundamentals, they cause the huge moves more market. You can analyze technically, but the price can go against you because the fundamentals. So, simply, we are going to filter out both JPY, both AUD, a very focus on USD. Rago kone ha rataha ha kwa logo te filter. E be re tobetsa teng. Then we filter out tse leng gore di na le bo white, yellow, and then a very focus on mo tse di na le bo red. So tse di na le bo red di supa gore that news event in a high impact more marketing. It can change the direction of market. The market lo map trending, it may change our market that's more downtrending. So let's filter out this, and then we apply the filter. So if you apply the filter, Tuesday, let's CAD, JPY, USD, AUD. Wednesday, let's USD, and then I refocus mo se sigiragalang ka mos. So tomorrow is Thursday. We have USD. We have USD. We have USD. We have CPI, CPI, core CPI, unemployment claims. Our main focus is CPI. So this news events, ga di iragale nako nngwe le nngwe. Di iragala ka 2:30. Has half 2. Compare go change it's 2:30. So hana go 2:30, exactly 2:30. Go tswa spike mo market-eng. Is either ile spike sa NFP or ile spike sa CPI. Remember during nako yone ya the events. So that's why NFP ita ga wide mo kgwedi le CPI hela. So today is the first Friday waga January. Ka 3 go tswa spike say le gore that spike, if you catch that spike, I'll try to account $100. I'll try to account $50. Spike is so. Sa go nela madi a mangwe le gore sa lo trade a iso a board. So, but se se botlhokwa ano ke gore if you get that spike, o tshwanetse gore o bole bothale because the price can blow you before you catch that spike. So there's this tool where you can use it. It was out there. Just search for a time IS. Time IS. So one was it something before we got this at the fundamentals. So with time IS, so more time IS, now exactly how imagine if we met NFP for now 1 minute, how you are going to miss that spike. So you can use this tool for search our time IS. So what I will be seconds, let's say got so let's say got 2039 spike immediately higher 40 seconds here you start to execute your trades. You can't execute the trade exactly 39 because that time price are very volatile. So when the price is very volatile, the spread starts to be big. And then when the spread starts to be big, if you try to account $50, it's going to allow you to open just a minimum lot size. So if you execute the trades before the event, you are able to execute lot size execute. So ipenako level la nako gore nako isn't ele khakala mo guys. So I tsama gona ha isa tsore 39 you start to execute your trades. So now let's go back to forex factory because so tomorrow half 3 we are trading CPI. We do the same thing since you work also how it's now over trade a CPI. Firstly, you start by analyzing the market technically, and then after analyzing the market technically, what are the fundamentals? Now what's on part table talk? So more parting able talk why this part finally patering actual price focused. You're gonna part table talk one more the fundamentals. If you are talking about fundamentals, you are party. So if the actual price is more than the forecast, USD is going up. If the actual price is smaller than the forecast, USD is going down. All pairs that is similar like a USD CAD, if the actual price is more than the forecast, they buy. If USD is small, if USD is going down, it means USD CAD is going down. Let's say the actual price is more than the forecast, and then gold. Gold is selling because the actual price is more than the forecast. If the actual price is less than the forecast, you sell gold. So and then if you trade so the actual price and the forecast, you have to balance it with technical analysis. That's all about fundamentals. Is all what you do nakoma the forecast, the actual price. If USD yago jimu the pairs of the similar like USD, they are buying. If USD yago tasi, the pairs of the logoring, they are like USD. So USD, what USD, they are got us. So that's all about fundamental analysis. Balance fundamental with technical. If USD is going down, or what Kisela gold, we have to look order block for that sell opportunity. Then you enter. So we are left with less than 1 minute. Lesson away here. So that's all day. Let them pull la lore. Halau to saying way. Go Telegram. Let us send a message go Telegram or WhatsApp.